right. Good evening, guys. It's evening here. Evening here. Okay. So, do you want to make money online, or have you thought of the idea of making money online, or do you still search on Google on how to make money online? You found the right place. Make money online for trading. If you want to make money online, a legit way of making money online, then it's forex trading. There is nothing like a scam in forex trading. You make money through the buying and selling of currencies. So this is a video on how to teach you on the ways you can go about it in forex trading to make money online as I do now. I do make money online. All right. So this is a beginner session for all those who want to learn or all those who are aspiring to be forex traders or even advanced traders who want key details on how MaxJ affects to how I see the market. So I don't see the market as many preachers of forex gurus see, but I see the market differently. And the way the way I see the market prints me the money I want. All right, so this is the make money online section for forex trading. This is a beginner guide, and this is our first lecture. So our first lecture, I'm going to uh, I'm going to teach you what is forex trading and how forex trading works, and why people trade forex and major players in the forex market, and the tools you will need to start. All right, so not wasting much time, let's start with the first one. It is what is forex trading. So the next slide is that so the forex trading is the same as the forex exchange market. So it is a global market where currencies are being traded. So currencies are being bought and sold. So in each day, so trillions of dollars are traded each day, and the market is open 24 hours, which is Mondays to Fridays. Mondays to Friday. That's the forex market. All right. So the next slide is how forex trading works. How forex trading works. So the forex trading currencies are traded in pairs. So currencies are traded in pairs. Example, in my country, which is Ghana, normally we weigh the Ghanaian cedi with the US dollar, and yeah, and the example I have here, that's Euro USD. So it's always two pairs. And the GBP USD, you also have USD JPY, and lots of pairs being exact. So these are currencies, countries, which currencies are being traded. All right. So example, we are trading. Let's say so this example, the euro is trading with the dollar. So this is the trade between the European countries and the US dollar, the United States, the trade between them. So how would they exchange markets? If I want to buy, let's say, uh, gallons of oil in the United States, how much euro do I need to buy? If I want to buy the, let's say, another gallons or 15 gallons of oil in euro, how much or how many dollars do I need to be able to buy those gallons? So this is basically what forex trading is, and it works by trading between countries. So the first currency that you see, so the first example, the Euro USD, the first currency that you see is called the base currency. And the second currency you see is called the quote currency. So, if you have ever seen the forex chart before, a place where the currencies are being traded online, you will see that you have the euro and the USD. So the euro and the USD charts. So the chart that you see is always the quote currency, the correct quote currency that you see. So, the example, if USD, US Euro USD is 1.10 cents, so it means that for you to get 1 euro, you need $1.10 US dollars in order to be able to get 1 euro. Yes. Okay. So the next point is that why people trade forex. So why do people trade forex? Okay. So people trade forex because forex trading requires low capital required to start. So you can start with any amount. So basically it was any amount, but now the most limits on the brokers platform is $10. So in Ghanaian cedi, you need about 128 Ghana cedis in order to be able to trade the forex market. Just as little as that. Yes. And in the United States, you need just $10 to be able to trade the market. Other platforms also require as little as 60 cedis, that's a Ghanaian currency, and also $5 in the United States currency. Okay, so now people trade because of low capital and high liquidity. So high liquidity because there's fast buying and selling, which means each and every day, as we talked about, uh, trillions of dollars are traded every day. So which means that there is liquidity. It means people buy and sell, fast buying and selling. There's aggressive buying and selling. So because there's people waiting to buy, people waiting to sell, there's high liquidity. There's high liquidity. And also you can profit in rising and falling market. So you profit when you buy at low, So you buy at low and you sell at high. And when you buy at low, let's say I bought a laptop for let's say $200. So I bought a laptop for $200. So that's the a cheap price. And now the price, let's say, because of many circumstances that may affect price, price rose to let's say $300. And at that $300, I decided to sell the laptop. So which means that at the point of selling, I've made a profit of 100 cedis because I bought it 200 cedis and I'm selling at 300. So it means I've made a profit of $100. Okay. So you can also profit from also selling. You profit from selling when you buy when you have a laptop. So you have a laptop, let's say the laptop costs let's say $800. So the laptop cost $800 and you decided to sell the laptop. So at the $800, because you are selling, you sold it at $800, and now the laptop price has decreased to let's say $500, which means that if you want to buy a laptop, you have to just use $500 on the money that you earn from the laptop you sold. Which means if you want to buy a new laptop, you have made a profit of $300 on that 800 you sold in the market. So that's how you profit in rising and falling markets. And leverage. So leverage also allows you to control larger trades. So leverage allows you to be able to uh, uh, buy large volumes of, let's say, if you want to buy $1, because of uh, leverage, it will give you the opportunity to buy at least, let's say, $10, even though you have small capital. So that's what the leverage will do. It allows you, or it gives you the opportunity to hold larger amounts of trades. That in a natural sense, you won't be able to do that. But because of leverage, you have been able to do that. Okay, and the next one is so that is set like it's major players in the forex market. So there are many major players in the forex market. You are not the only one to do the forex market. There are a lot of people, and they are big players. So the first one is the central bank. The central banks are normally known as the bankers to bankers to banks. So these are banks so that has the country's name. So let's say the United States of America. So they have a bank for the United States. You have the uh, the Bank of Ghana. We also have Bank of Nigeria, Bank of United States. So this holds the name of the currencies. So that's how you can use to identify those banks. So these are called central banks. We also have commercial banks. So commercial banks are deal with we individuals. So they deal with us. They accept deposits and withdrawals from us. But the central banks accept deposits and withdrawals from those commercial banks that receive. There are many banks that we see around. All right. So the next one is the hedge funds. So the hedge funds are institutions. They are very big institutions which have large amount of capital, and they also want to profit from the forex markets. They want to profit from the forex market. So what they do is that they also buy at low, sell at high, just as the retail traders. So the retail traders are we individuals who trade the forex market. So we have small capitals which we want to scale into bigger capitals. So you buy at low, sell at high, so the same as the hedge funds. So the retail traders are we the individuals with no capital, very, very small capital compared to those three major players in the first market. All right, so the next one is tools you need to start. Tools you need to start. So for you to be able to trade the first market, the first tool that you need is a broker. So you need a broker in order to be able to trade the forex markets. This is because the brokers are a link between the buyers and the sellers. So they link us to the market. So the brokers are between the buyers and the market itself. So the buyers, so they link us to the markets. So for us to be able to buy or sell, we need to pass through the broker in order to buy and sell. All right. So the next point is a trading platform. So you need a trading platform in order for you to trade the forex market. So now there are many trading platforms around that you can use to be able to trade the forex market. And we have an example is the MT5, the MT4, and other platforms around you. All right. So the next one is you need a stable internet in a device. So a stable internet in a device. So do you have a smartphone? Do you have a laptop? Do you have an internet? Then you can also connect to the forex market. So since you have a broker, you have a trading platform, you have a stable internet device, then that is it. You can be able to enter into the forex market just having it. And the last point is you need a clear strategy and risk management plan. So this is very, very essential in the forex market. You have all these three things, but the last one is the most important. When you don't have it, then you may not make it in the forex market. You may fail as a trader. So this is the major points that we elaborate on throughout this study. Okay, so the next one is the final one, which is the tips. The tips I would advise. I would advise that you watch the chart each day on your free time. So this is what I did. This is what I did, and I think this will help you to be able to at least figure out a little things in the forex market by yourself, just by watching the chart. So if you want to find a chart, just search tradingview.com on your device if you have an internet connection and a search engine to a Google, Chrome, Safari. Just search tradingview.com. So when you search it, sign up, and now you see that they have currency pairs or commodity pairs or anything. Just click on one, and now you'll be able to access the chart. So you just be watching the chart. Just be watching the chart each day if you have the time. So this is what I would advise to you. All right, so at the end of this, that's the end for our first lecture. And I will say congratulations on being able to go through this video up to the end. And we'll continue with the rest of the lectures. It is just 10 solid beginner slides, 10 solid beginner lectures. So 10 solid beginner lectures. That's I've made personally and brief for able to get the general knowledge about forex trading and also how to maneuver your ways in order to trade the forex market. All right, so at this point, I will say thank you for following MaxJFX. Subscribe, like, and comment. Thank you very much for sticking around. And again, this is MaxJFX. Bye bye.